Interest rates, rents, and inflation are all skyrocketing. What will happen to the real estate industry and how can you protect yourself? Stay tuned to find out. If you're a homeowner, investor, or interested in buying property here in South Louisiana, we have all the data that you need. I'm J. Ray with Keaty Real Estate, and this is your market update. The big news right now is the rising mortgage rates. So let's take a look at what mortgage rates have been doing so far this year. Interest rates started at 3.11% in January, and at the end of March, we're at 4.67% and climbing. So why are interest rates rising? Inflation. It's what's driving the increase in mortgage rates. The experts are predicting that the rates will continue to rise, but likely at a more moderate pace. So the big question people have been asking is, what will happen to home prices as interest rates rise? Well, most people think as interest rates go up, prices go down. But here's some data from Freddie Mac. What you're looking at here is the impact of rising rates on home prices when there's a rise by more than 1% percentage point. Going back to 1993, you can see that the data shows on average an 8% interest increase in home values when interest rates increase more than 1%. Overall, you see rising interest rates do not negatively impact home prices over the last 4 decades. But what will happen to our sales when you have over a 1% interest rate increase? When we add sales data to this chart, you can see an average decrease of 5% in sales overall. As rates rise, that tends to reduce buyers' activity and price some buyers out of the market. We are in a fundamentally different environment than what we've been in the past. When inventory is low, home prices will continue to rise. Inventory still is very, very low, and that is the driving force of the rising home prices. So although we expect the interest rates to continue to rise, we expect them to rise at a slower pace than what we've seen in the last few weeks. One of Freddie Mac's analysts said, history suggests that when rates rise, there's an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow. The Freddie Mac analyst shows that a 1% increase in mortgage rates result in home price appreciation that is 4 percentage points lower. For instance, a 1% increase in mortgage rates would change home price growth from 11% to 7%. The mortgage rate increase will slow some of the frenzy, but we're not talking about a depression. We're talking about a softening and deceleration, which will slow some of the buyers as we move forward in the housing market. This current lack of inventory is contributing to a seller's market. The average price for the first quarter of 2022 has increased from $251K to $271K. That's an 8% increase year over year. Let's take a look at the next graph and the home price forecast for 2022. I think it will give you a very good picture as to where home prices will be according to the experts. Here you can see the average of the 7 experts predicting the home values to increase 6.7% in 2022. So as you can see, all signs are pointing to prices continuing to rise, but at a slower pace. I hope you found this information valuable. If you'd like to receive these market reports monthly, or if you'd like a free market analysis on your property, I'd love to help. Stay tuned for next week when I will break down pending sales and foreclosures. I'm J. Ray with Keaty Real Estate, and thank you for watching.